And we begin with a Fox News alert. The fears of slowing global growth rocking Wall Street. Hello, everyone. I'm Heather Childers. I'm in for Gretchen today. Stocks taking a hit. The Dow down triple digits again today. But this is actually a much better picture than at the open when the Dow briefly traded over 1,000 points lower. All of this follows a terrible stretch last week for stocks. The Dow losing 1,000 points over 5 days, falling into correction territory. All of this showing up in our 401ks and our IRAs. So what should we do? Joining me now is Adam Shapiro. He's from the Fox Business Network. Thank you so much for coming in. It is a busy day for you.
It is a busy day. I mean, we were down 1,085 points at 9:35, 5 minutes after the beginning of trading, and then we recovered. So this is the question all of us are asking. What do you do when your 401k is down 10% and on a day like this? And the very simple answer is nothing. If you are, quite seriously, well, don't panic and ignore the news reports. And literally, if you're 30 years old, boy, are you lucky, because you're going to, if you're funding a 401k, you're going to be buying in at cheaper levels. If you're 40 or 50, you have plenty of time to recover from a downturn in the market.
And what if you're older than that, though? What if you don't have that time to play with?
So as you approach 60, you should be having a discussion with your financial advisor, and that can either be your wife or your husband or an actual financial advisor, about minimizing your exposure to stocks. When you're in 60 or 60 and over, you should not have the majority of your money tied up in stocks, precisely because we go through these swings, and you don't want to be this exposed to them.
And that's my next question. Is the worst over?
I wish I could answer that question, because then I'd be a trillionaire. Quite honestly, no, the worst is not over. We're going to go through this for a period of weeks because there's so many different variables at play. But you see it right now. If you look at where the Dow is right now, it was down 1,085 points. It recovered almost to about 150 points. Now it's going back down.
So
we're down
what caused this to begin with? I know we were talking about China, the price of oil. What else?
All of the above.
Yeah.
Two things. China's economic slowdown. Most companies in the United States, when you look at S&P 500 companies, only 3% have revenue that's generated out of China. So it's really not that we're invested in China. It's that the rest of the world will slow down as China slows down. So for a company like Apple, that stock hit a 52-week low this morning and then shot back up. 16% of their revenue comes from China. So if China's slowing down, how is Apple going to make money in China? But people believe they will, because Apple went positive today. Their stock actually went positive because people saw it. $92 a share. That's a buying opportunity, and then it went back up to about
another
105.
one, Disney.
Everyone knows Disney, right? That stock was $122 just 3 weeks ago. It fell to about $98 a share. It came back today because Star Wars and Star Wars theme parks, it's all coming down the pike in the next couple of months, and investors saw an opportunity to buy Disney stock because they believe the return in the future is going to be greater. So the bottom line for all of this, you cannot do a stock investment if you buy individual stocks one day in, one day out. That is day trading, and that's craziness. Warren Buffett said it best. You, me, most of us, we should be in index funds and leave the crazy day trading to people who are much smarter than us, and Warren Buffett is about as smart as it gets.
So interest rates, I want to ask you about that and the Fed. And there was a possible talk about, raising interest rates for the first time, maybe in September, for the first time in actually nearly a decade.
Okay, so let's talk about...
Will this change that?
A lot of people are saying it will, but there are other people who say that the Federal Reserve, it doesn't look at Wall Street per se. It looks at inflation and it looks at employment data. And we could still be very much on track for a 25 basis point, which is 0.25% interest rate come mid-September. But here's the good news that's going on right now. If you need to get a mortgage, if you need to refinance, boy, this week or next week, because of what's happening with this sell-off, the mechanics of it is people are buying U.S. Treasuries, and that's driving down the yield on the 10-year note, which is somewhat tied to mortgage rates. Bottom line, this is a good time to refinance or get a mortgage this week and next week. You might miss an opportunity.
Love how you look at the glass half full.
You got it.
Ended on a positive note. We appreciate that. Thank you so much, Adam. Thank you for joining us today. I'm Shapiro. Well, some customers, meantime, at online brokerages, TD Ameritrade and Scottrade, they reported having some trouble accessing their accounts this morning. TD Ameritrade reportedly responding directly to complaints on Twitter, telling customers that they were working on the problem. Scottrade saying in a statement that their issues have also been resolved.